Do you ever wonder whether you can make a living from just dividend income? Well, I can't quite do that yet, but I am working towards helping dividends be part of my overall income, probably one of 7 different income streams. I'm going to talk you through what I managed to make from my dividends in the month of November. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. So first of all, let's go and jump across to the app that I use to track all of my dividends, and that is GetQuinn. If you're interested in having a free go on this, I'll drop a link down below that you can have a look at and see whether or not it is something that might work for you. All in all, you will see that it is a pretty bumpy ride when it comes to collecting dividends from dividend paying stocks. You can see there are some peaks and troughs, with June being certainly the highest paying month that I have had. All in all, 8 different stocks paid me in November, and first of all I'm going to kick off with Barrett's, and that paid me £2.85. So this sits within a UK house builders pie on Trading 212, which is where I've got my stocks and shares ISA parked for this year and the one that I've used for the past 3 years. If you're interested in having a look at Trading 212, I'll drop a link down below where if you sign up and invest £1, you will get a fractional share worth up to £100. Obviously, there are risks with investing. House Builders Pie on Trading 212 has been hit reasonably hard over the last few months, and that's because a number of the companies have come out with sort of warnings in some of their earnings calls, basically saying that prices of some materials had been worked out incorrectly in the first instance, so that has had a bit of a knock-on effect on some of the profits that they have made, and Vistry being one of those. And as you can see, it is down 20% at the moment. But you will also see Persimmon on there, and we did get a dividend payment from that, but it is also down at the moment. But potentially that does provide us with a bit of an opportunity. As these dividends come in, we could reinvest those back into companies within that house builder pie, and hopefully when the UK government's drive for more housing, the 1.5 million more houses to be built over the next 5 years, we'll start to see that whole sector start to lift, and all the ancillary businesses that play a part in building houses will also start to see a bit of growth as well. And that's the whole reason that I've invested into that UK house builders pie. But next of all, we've got British American Tobacco, the quarterly dividend payer, paying me £35.33. This is one that I'm just going to continue to hold for a number of years and potentially reinvest some of the dividends from BATS into others, which takes me on to ASML. Only a small amount coming in from ASML of that £3.10, but as you will see, it has taken a bit of a hit over the last couple of months, and I've just been dollar cost averaging in with, as I've been getting dividends, I've just been reinvesting those back into ASML, and not just what I got from ASML, but what I got from BATS as well has gone in, and that has driven me up to having nearly 2.5 shares of ASML. I certainly see this one being one that is going to start to grow again in the near future, and hopefully we have bounced off that 52-week low and we'll start to see a bit of growth coming through shortly. Next we have Persimmon, that paid me almost £1.50 in dividends, and that is one of those other house builders that has been hit particularly hard. Then have Taylor Wimpey paying a nice little tidy dividend of £24. Once again we have Realty Income coming in nice and steadily, as it is the monthly dividend payer. It has once again paid me another £35.52. As I've said in the past, this is the largest individual holding that I have within the portfolio, and if it starts to get well up over the $60 mark, I might start to trim that one back a little bit and then hold for, inevitably you will see that start to come back down again before starting to buy in. And Primary Health Properties, just another one of these companies that I have been gradually buying a little bit into, and I've now got 2,000 shares in there, up about 4%. And this one paying a nice dividend of 7.24%, quarterly payer. And because of the industry that this one is in, I'm reasonably confident that GP practices in primary healthcare partnerships will be continue to pay the rents for the properties that they own. And then my final payment of the month comes from UK Wind. As you can see, UKW, once again, another company down close to 52-week lows. I have added a little bit more to this one since it went ex-dividend, and I now own 1,275 shares, and this one has paid me £28.13 in dividends this month, and as we can see, sat at a dividend yield of 8.65. Lots of these trusts within the renewable sector have been struggling over the past few months and over the past year, really. Many of them down between 10 and 20%. And that is also down against their net asset value. So hopefully this is something, as we drive towards needing to get to net zero, you'll start to see companies like UKW and the renewable infrastructure group TRIG start to see some growth in their share value. But maybe dividend stocks aren't the way forward and aren't the type of thing that you want to invest into, and you just want a very simple set and forget approach. Well, if that is in your strategy, why don't you go and have a quick look at this video where I've got some details on dividend paying ETFs that you might be interested in having a look at. Thanks very much for watching, and I will see you in the next one. Cheers, bye.